Welcome everyone to Vested Interest. This is Shane, and we are back for our weekly portfolio update. I know I've been gone for a while. We will cover the $1,285 that I added to the portfolio this week, the positions that we picked up with those funds, as well as any dividends paid out, any options that we were in. It was a short week, so not a lot of activity to cover. Again, I was on vacation, so I am back now. Had to go down for a wedding for my cousin on Monday. Stayed down in Texas for a couple of days, and then obviously Thanksgiving was Thursday. Hopefully everyone had a great holiday weekend. Did some hunting on Friday and Saturday, but we're back. We're going to cover the portfolio update. We do this every week. But before we get too far in the video, I'd like to thank everyone who's taken the time to watch, comment, and like the videos. And a special thank you to the subscribers of the channel. You guys are awesome. I really do appreciate it. The channel continues to grow because of people like you. For those of you who may be stopping by for the first time, on this channel, we focus on dividend growth investing. It's not rocket science, in my opinion. The best way to do anything, keep it as simple as possible. So it really boils down to consistently investing, buying dividend growth stocks and growing companies with positive cash flow that covers the dividend and companies with a high return on their invested capital. I utilize both a dollar cost average approach, consistently investing into the portfolio on a weekly basis, and that's what this video is. It's our weekly portfolio update. I also do larger purchases if I get a bonus. Usually I get a bonus in the spring, around April, May timeframe. So that goes right into the portfolio typically. Or if I do a side job where I've got some extra funds, something along those lines. It's free to see what I'm doing in my portfolio. There is nothing to pay for. I don't have a paid Patreon account. I'm not sending you any sites to sign up for a newsletter or anything like that. But if you would like to help out the channel, if you could do me a big favor, hit that thumbs up button down below if you find any value in this channel. If you are a dividend growth investor, make sure you hit that subscribe button. Join us on this journey to financial freedom. Join the vested interest community. Click that subscribe button down below if you have not done so already. Hit the notification bell so you're notified whenever we put out any new content. Typically, I do this video, not typically, every week I do this video series, the portfolio update series, as well as typically whenever the market's open Monday through Thursday, I do a stock pick of the day video series as well. So click that notification if you want to check out those videos, or go ahead and jump on the channel and check out some of the other ones that we've got. And if you would like to buy me a cup of coffee to say thanks, there is the thanks button down below as well. Really appreciate everyone who's able to do that and completely understand times are tough. Some of us just aren't able. That's completely all right as well. If you could just hit the others, that thumbs up, subscribe, and the notification bell, that's great too. All right, now let's get into the actual activity for the portfolio. Like I said, not a lot, no options. I'll be honest with you. I was at a wedding pretty much all day Monday, or preparing for a wedding there down in Texas. So I didn't even get on the computer until last couple of days there on Friday whenever I jumped back on. So no options. I didn't even put any out there this week. Nothing to talk about there. No dividends received either. So same thing. We just didn't receive any dividends. Short week. Plus the market was closed on Thursday and part of the day Friday. So nothing to talk to there. But we will go through what we added to the portfolio, or what is sketch. I'll say this. Technically, we didn't buy these shares. Technically, it is set up to purchase as the market opens on Monday. Again, I was not really aware, I guess I should have been, it's every year, that the market closes early on Friday. So whenever I got into the market about 2:30 on Friday, it was already closed. I think it closed at 1 or 2 o'clock in the afternoon. So what I did is I set these up to purchase on Monday morning as the market opens. So whatever the market is, it'll tell you the price, right, as of the close of business on Friday. But if it opens a little bit different than that, it's just going to purchase those shares at the market value. So 4 shares of Kraft Heinz, ticker KHC, out of the consumer staples sector. We're adding to that sector there. Again, at $31.95 is what we have it currently set to purchase. But if the market is slightly different, whether it's lower or higher, it's going to purchase those shares. So I actually have a little bit more funds in the account right now than just what's set to purchase. Just so if it is a little higher on some of these or lower, then it will purchase them anyway. But Kraft Heinz is set up to purchase 4 shares. Haverty Furniture Company, ticker HVT, out of the consumer discretionary sector. 4 shares there, set at $23.34. But again, it's at market. So if it's lower or a little higher than $23.34, it's going to purchase those shares at whatever it opens in the market on Monday morning. Now, the 4 shares of Kraft Heinz and the 4 shares of HVT, Haverty Furniture Companies, would be $221.16 if it hits at the current price, right? Purchase price. But if it's a little off, again, it's going to purchase whatever it is. So I'm putting the 221 based on these numbers here. Passive income added, that won't change. That'll be $11.52 whenever these shares are purchased. And we also added to our Nutrien position, ticker NTR. This is out of the material sector. 2 shares there at 46.82, but again, set at the market, so whatever it opens at. Lam Research, we've been adding to that every month in November. We continued that trend here the last trading week in November. LRCX, this is out of the information technology sector. 4 more shares there at $73.88. But again, set at the market. And the last, but certainly not least on our list, Alphabet. You probably know it as Google, ticker GOOGL. And 4 shares there set at 168.75. I'm buying this under 170. I'm going to continue to do that. This may be the last week for a little bit as we do that. If it does climb up, obviously we're into December, but I would like to continue to add to Lam and Google. I'll probably have a video out later today on what I'm looking to purchase in the month of December. So keep in mind or tune into that video as well whenever it comes out. And the total here will be $1,064.16. Passive income added from these purchases here on Monday, again, whenever the market opens, will be $7.96. Total invested, if it hits the prices that were set at Friday, will be $1,285.32. Total passive income added will be $19.48. And again, these are just set for Monday morning purchases market because I jumped in on Friday a little bit after the market actually closed. I actually thought it was open all day, but again, I know they close on early on Fridays. They have for decades. So, the Friday after Thanksgiving anyway. So I should have known that. I should have jumped in early, but I'll be honest with you, I went hunting that morning and just didn't get back to my computer until about 2:30 in the afternoon. So it is what it is. They're set to hit Monday morning. And then we'll go in next week and do our purchases for next week as well. What I typically do there is I'll transfer the funds on Monday morning. I'll start looking at where the market is and start lining out my buys. Heck, I may even jump in and buy some. Typically, I buy some on Monday morning. But you will notice here there are a couple purchases that are not shown, which will probably be what I purchase first thing on Monday as well whenever I do jump back in the market. There's SCHD. Typically, I buy 3 shares of SCHD, so I'm going to double that up next week, so I'll be purchasing 6 shares. And VTI, Vanguard's Total Stock Market ETF there, and SCHD is the Dividend Growth ETF from Schwab as well. Both from, one from Schwab, one from Vanguard. So I'll be doubling up on those. VTI will be the other one. Typically, I buy 1. I did not pick up that purchase this week. I wanted to add to the Google and LRCX positions. So I'll double up next week, and I may just do that going forward for the rest of the year, double up to end out the year. I don't know yet. I've got some positions that are down a little bit right now in the portfolio. I may add to those as well and just stick with the 1 share of VTI and 3 shares of SCHD. We'll see what the market shakes out. Obviously, a lot of stocks are hitting all-time highs with the market screaming into the end of the year. Typically it does. You get that, what they call Santa Claus rally. That definitely looks like what we're having right now. And I don't want to add to some positions that are really at their peak until they start pulling back. But I do have several positions in the portfolio that are down, Kraft Heinz being one, Valet being another, several others, HVT being another, NTR being one, several of the ones I picked up this week. So I may focus on the ones that are down in my portfolio to end out the year as well. We'll see. Like I said, I probably put out that video later today. But let's keep going here. Let's look at the sector weight update here. Communications makes up 10.69% of the portfolio. Consumer discretionary sitting at 4.63%. Consumer staples, 9.2% of the portfolio. Energy makes up 6.28%. This sliver here is financials at 2.98%. Healthcare is sitting in the second place position at 12.61%. Industrials is 6.8% of the portfolio. Technology is the largest piece of the pie at 13.25%. Materials sitting at 7.91% of the portfolio. Utilities makes up 8.47%. REITs and real estate sits at 8.43%. And ETFs, it's starting to grow. And again, it'll really jump up next week, probably into the 9% range whenever I add a double dose of SCHD's weekly shares as well as a double dose of VTI because I missed that last week. But we'll double up on those, but currently at 8.75%. And eventually, this slice here will overtake the overall portfolio just by the nature of adding to those positions every week. Over here to the right, you can see those portfolio sector weights, percentages that match up with the pie, as well as the dollar amount allocated to each as well. Now here it is, and I do show this every week, and I say this every week. I think it's important for those of you out there who maybe are starting your investing journey or on the fence about starting an investing journey, haven't started yet, maybe you have some trepidation, maybe you don't think you can do it. I think it's important that those of you out there see a real portfolio built out over time, the ups and downs associated with it. Positions are going to go up and down. All positions have a 52-week high and a 52-week low, and they can set a new 52-week low or a new 52-week high at any time, and they can retest those at any time throughout the year. And sometimes they do it multiple times throughout the year, right? It is the nature of stocks. They go up and down for a multitude of reasons, whether that's their earnings report, either they miss in the top or bottom line. Sometimes they go down, sometimes they go up, sometimes they exceed their top and bottom line and go down for no reason, apparently. Sometimes it's negative news. Sometimes it's impacted by other events around the world, like wars, famines, things like that, elections, right? We will certainly see some impacts from our current recent elections here in the United States. There's all sorts of reasons why a stock goes up and down. You need to understand the companies you are buying, right? Make sure you understand how to value a company, be able to look at the metrics, look at their balance sheet, their income statements, their debt to equity ratios. Are they paying down debt? Do they have more assets than liabilities, where if they had to sell off some assets to pay off some debt, they could do that? Are they issuing shares or buying back shares? You want to know that. You want to know if their margins are expanding. Is their revenue expanding? These are things you want to be looking at if you're buying individual stocks. And if you don't want to do that type of research, there's nothing wrong with that. You can still invest in the market. VTI is an ETF that covers all of the stocks in the New York Stock Exchange. You could invest there. Warren Buffett would recommend VOO, or another ETF or index fund that tracks the S&P 500. But if you look at his 13F, I believe it's VOO that he has in there. I think he has the SPY as well, SPY, another one that tracks the S&P 500. He would recommend anything that tracks the S&P 500, an ETF or an index fund for the average investor. That's what Warren Buffett would recommend for me, you, and everyone else. So if you want to go that route, that's fine. I also invest in SCHD, but there's also VYM that's very similar, another dividend growth ETF out there. So if you're a dividend growth ETF investor or a dividend growth investor and you want to go the ETF route, there's two that you could look at, SCHD and VYM. There's other ones out there as well. A lot of ETFs, a lot of index funds out there that track certain markets. You could track the NASDAQ, you could track the Dow. Like I said, Warren Buffett would recommend you track the S&P 500. I chose VTI because it includes the small caps. It's all the stocks. So if the small caps were doing well and mid caps and large caps were pulling back, you'd probably still be all right. That's why I chose VTI. But you choose what you want for your investing strategy. You don't necessarily have to be investing in individual stocks. I do like it. It gives me something to do. I like to look at the metrics of the businesses, understand the businesses, and a lot of these businesses, I use. Kraft Heinz. There's stuff in my cupboard and in my refrigerator that are Kraft Heinz products. Kroger, I shop at Kroger. Google, who doesn't use Google? Enbridge, that's a company that actually has their pipelines across the Great Lakes. I live in Michigan, so I'm well aware of what they do. EPD, I was well aware of from the time that I lived down in Texas, right? Comcast. I don't know that we use their service, but I did back in the past. BABA, all right, I don't use that one. I'm not a Chinese consumer or use their BABA platform. Ally, that's my bank, right? So a lot of these are just companies that I'm well aware of that I use every day. Pfizer, another one. I'm pretty sure I get some drugs from Pfizer. I didn't know I got some of my vaccinations from them. Procter & Gamble, I know I get products from Procter & Gamble. So on and so forth. Verizon, same thing. So that UNPM, Union Pacific Railroad, I'm sure some of the products I buy are shipped through Union Pacific, right? So I'm buying companies that I not only know. CVS, that's where I shop for pharmaceuticals if I need them, when I need them, right? So these are companies I'm aware of that I use every day, and I don't mind investing my capital in them because I am not only a patron of them, but I feel like whenever I do go in there and I shop, I'm actually getting something back on the back end from the dividends that they pay me out as well. So that is the idea behind my investing strategy, as well as the ETFs, right, that give me exposure to the entire market and some dividend growth in SCHD also. So you pick your investing strategy, but the biggest thing is be consistent, right? Be consistent, whether it's weekly, whether it's monthly, whether it's semi-annual, once a year, whenever you get your taxes back. Consistently put that money into the market whenever you can, and don't get scared out of the market, right? You can see there's some red in my portfolio. That doesn't mean I'm selling these positions, right? CVS, I think it's down because healthcare is getting hit quite a bit right now. They're having some issues as well, but overall, the fundamentals of the business look sound. So I'm actually adding a little bit as it pulls back, right? When I see red, if the fundamentals of the companies still meet the metrics that I set up when I invested in them, I'm going to add to those positions. HVT, you saw me, I picked up more shares there, right? It's down 12%. Well, this is the time I should be buying. If I thought it was a good buy at 27, it should be a great buy at 23. That's the idea. I want to show my portfolio. I know there's a lot of other YouTubers out there that don't. I think it's important if you're talking about investing on YouTube, right, and you want to tell people or kind of guide people and be a voice out there in the financial space, you should be showing your portfolio, right? Otherwise, you could be talking to a guy on the subway and use his opinion as well as anyone else's. That's the reason I do it. But let's keep going here. We can get off that soapbox. As you can see here, ticker, here's all the positions in the portfolio. Total shares as of the close of business on Friday. All of these numbers will be as of the close of business on Friday. Current price, market value in this column, average cost per share right here, what my cost per share is. That does include reinvested dividends. Purchase price also includes reinvested dividends. Total return, whether I'm up or down, I'm going to show it, right? You can see I'm down on the positions that are in the red. Percent return here, same thing. Red means I'm down, green means I'm up. What sector the positions fall in, whether they're a quarterly, monthly, semi-annual payer, their current yield as of the close of business on Friday, my yield on cost, portfolio weighting. So what you saw on the previous slide was each sector weight. This is each individual position's weight. And I do have a rule here. I don't want any one position to be more than 10 to 15% of the portfolio, and I don't want any one sector to be more than 20 to 25% of the portfolio. Estimated annual income in this column, payout months here, dividend growth year over year in this column, and this will change as their dividend growth change over time. And that jumps me back over here. You can see the companies that have raised their dividend this year are highlighted in yellow, right? And where it sits at 15% of a 52-week low. I use this. This is not a hard and fast rule, but it's just a metric that I can look at. I use this to gauge where the company is at 15% of a 52-week low, and I like to keep my cost balance below this number. But again, not a hard and fast rule. As you can see, Google here, for example, 15% of its 52-week low is $139.67. My cost basis is $161, so well above that, but I'm still adding, right? Because I still think Google is a good buy. And so long as my cost basis stays under the 165, 166 range, I'm going to continue to add here. Obviously, I would love this to pull back to where I could be buying back in the 130s, 140s, 150s, or even lower. But it's currently where it's at, and I still feel like it's undervalued, so I'm going to add there. So this is not a hard and fast rule, but it does give me something to look at where I can say, okay, we're about $20 or $30 over where it sits at 15% of its 52-week low. Maybe want to keep an eye on that for a little bit. All right, total shares $6,268. Total shares $6,268.194. Market value $323,409.92. My purchase price, so this is the funds I have into the position. This does include reinvested dividends, $290,172.31. I do have the drip set, right? So the dividends get reinvested back into individual positions as they pay out dividends. So it goes right back in. When I turn that off, this will change a little bit, and I'll probably have that money going into my pocket, or at least a portion of it. Total return, $33,237.60. If I was to sell all the positions in the portfolio right now, I'd walk away with this amount here, $33,000, just over. Obviously, I'm not going to do that. I am up 11.45%. Nice to see, but this is not my focus. I'm not focused on whether I'm up or down, right? I'm not looking to sell all the positions in my portfolio, so why would I focus on that? Current yield, 3.765. My yield on cost, 4.197. And that's why it's circled in red, is what I'm focused on. The dividends paid out by all the positions in the portfolio on an annual basis. It goes up weekly as I add new capital, as the positions in the portfolio pay out dividends, as they raise their dividends. Again, that's why these are highlighted in yellow. That means they raised their dividends this year. And as I reinvest those dividends, and those dividends buy more dividends in the future. And it currently sits at $12,177.10. And again, this does go up weekly, monthly, quarterly, annually, as I add new capital. And whether the market is up, down, or floating sideways, this continues to rise. Dividend growth year over year at 6.24%. Now, again, this will change over time as these companies increase their dividends at different percentages or decrease their dividends at different percentages. We don't want the decreases, but it does happen from time to time. Currently sits at 6.24%. I'll update this as we go into next year, and we'll see some of these positions start to get increased again. We'll adjust this, and we'll see what it shakes out at. This will change over time. That is really it. That is my portfolio update. This is where I currently sit. What are you adding to your portfolio as we end 2024 and head into 2025? What are you focused on for this last month? That's right, the last month of the year. I cannot believe it's December 1st already. Hopefully you're getting ready for your Christmas vacations and New Year's coming up. You've done all your shopping. If you haven't, get out there. I know my wife went out for Black Friday. It was crazy, so it always is this time of year. But the holidays are coming, and hopefully, again, you had a great Thanksgiving holiday with family and friends. Let me know about that down in the comment section below. Did you travel anywhere? Or do you just have it at the house? And let me know what you're investing in. What are you looking at for the next week coming up and the month overall? And as we head into 2025, love to hear from you in the comment section. Well, that is really it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company you'd like me to cover in the Stock Pick of the Day video series, go ahead and drop that below as well. And don't forget to click that notification bell so you're notified whenever we put out any new content. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great weekend. Happy holidays, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.